Hi, everyone. It's Marcus with the Dan Choi Group, and I'm here today with Mina. Mina is one of our mortgage loan originators that we work with regularly. Mina, thank you very much for coming on here. I appreciate that very much. I know you're super busy, but if you could quickly just introduce yourself and tell us a little bit about your background.
Yeah, so first off, thank you, Marcus, for reaching out to me. I know the topic we're going to be talking about today is something that a lot of buyers have questions about in the current market. But anyway, I guess introduction wise, yeah, my name's Mina. I've been in the mortgage industry for about 8, 9 years now. And for those of you who haven't bought a home before, basically, simply put, I'm the money part of the home buying process. So as Marcus will show you the homes and basically walk you through the whole contract process and actually get into all the things you want in a home and the fun parts on HGTV. I'm the one who will pump the brakes and basically talk about the numbers and make sure you and your family would feel comfortable in the future if you were to proceed with the purchase. And other than that, yeah, I mean, born and raised in Southern California, UCI grad. So zot zot, they used to make us say that a lot during college, and I still find myself saying it. But anyway, that's basically kind of a quick background on my end.
Nice, nice, very impressive. So why I brought you on here today is I wanted to talk about the appraisal during the escrow process. And I know that with a lot of buyers in today's market, with homes selling above the asking price, 5%, sometimes 10% above the asking price, it's a big concern of people that if that appraisal comes back underappraised for the purchase price, what that can mean for their loan terms and how that would impact them. I know a lot of people just think, oh my gosh, if it comes back 20,000, 50,000 under what I'm buying this home for, does that mean I have to come up with an extra 20,000 out of my pocket? And that's just, not the case, but you're the expert. So that's why I brought you on here to kind of explain how that works for people.
Yeah, for sure. And I mean, definitely the appraisal is a big concern. And for those of you who don't know, the appraisal inspection is basically an appraiser will go out to the property and try to look at the comparable sales in the area and determine what their opinion of what the value is of your home is. But essentially, just to give you kind of an example, because I know a lot of times, as Marcus mentioned, it's explained whenever there's a situation like that, that you simply make up the difference. But yeah, as Marcus mentioned too, that's definitely not the case. And so I think it'd be helpful just to go through like an example and see how exactly the lenders would look at a situation like that. And so I'm going to share a quick screen with you all, and we'll kind of walk through a quick example of, let's say, the contract price that you enter escrow for your purchase. Let's just say, as an example, you are going to buy this home for 500,000. Now at 500,000, maybe from the beginning you communicate to me like, okay, Mina, I want to do a 20% down loan structure, no mortgage insurance, etc. And so of course that would mean 20% down, which will amount to 100,000, and 20% down of the contract price of 500,000 would amount to $400,000 loan amount. Now, this may be what we initially begin with, but what happens if the appraisal comes in lower, right? That's the big question here. So now we have to look at the appraisal value singularly. And let's say, as an example, the appraisal value comes in at 480,000. So that would mean it's $20,000 appraisal gap. But what the lenders are going to do is basically, now my next question would be to my clients, okay, are we trying to, or do you want to keep it at the same 20% down loan structure? And what we would have to do and how it would adjust the numbers is basically, the question I ask is, what would the loan amount have to be if you're doing a 20% down of 480,000? So what that would amount to, 20% down loan of 480,000 would be 384,000. So how that changed your overall down payment compared to the initial 100,000 you were planning is, now that we have to lower the loan amount to a 20% down of the 480K actual appraisal value, you would have to basically come in with the difference between the purchase price, assuming again that the sellers are not willing to negotiate. So you take the contract price and then whatever the difference is to bring the loan amount down to 20% down of the value, 384 in this case. Now your new down payment has gone up to 116,000 to keep it at the same 20% down loan structure. So you'll notice that with the $20,000 appraisal gap, It's not a cash to close difference of 20,000 exactly. Because what the banks are concerned with is the loan to value ratio. And so, for example, this 400,000 that we initially set the loan amount at, yes, that's 20% down of 500,000, but 400,000 is not a 20% down of the value, which is why we had to do our calculations singularly on this side on what would the loan amount need to be set at. And that is how we came to this new down payment of 116,000. And so the money is not disappearing into thin air. It's actually being applied towards lowering your loan amount. But another kind of, I guess, option you would have, because it's not always that you have to increase your cash to close in these situations. If you were somebody who tells me, okay, Mina, I don't feel comfortable increasing my down payment or overall cash needed at closing by 16,000, then the option I would present is basically restructuring the loan. And so, just as an example, in the same situation, if you guys are trying to keep it at the same cash to close number or as close as possible to the cash to close you're initially anticipating, 100,000, then with this appraisal value, what I might recommend is, okay, let's take a look at what it would look like if you were to essentially restructure the loan to a 15% down loan structure. Now, same calculation is going to come into play. $480,000 value, what would the loan amount have to be if you're doing a 15% down of that number? And that means that the loan amount would amount to 408,000. And so 408,000 to the 500,000 contract price. Now your new down payment is going to be 92,000. So in this case, compared to your original plan of 100,000, it's actually lower now by 8,000. And so in this situation, of course, payment is going to be a concern, and overall mortgage insurance, I know, is a very feared topic amongst a lot of buyers, since online they don't have a lot of good information on it. But basically what I would do is, okay, well, we freed up $8,000 of cash you were already going to go put down as a down payment in your original plan. Let's go ahead and buy out the mortgage insurance so you actually don't have a mortgage insurance payment. And maybe let's apply some of the money to buy the rate down lower than you may have had the ability to by doing the full 100,000 towards the down payment. So even in this $20,000 appraisal gap situation, believe it or not, if we restructure it this way, payments remain the same, and then the cash to close remains unchanged, if not slightly lower. And so bottom line, there are a lot more options than you might anticipate in a lower appraisal situation.
Well, very good. Yeah, that's lots of great information. Hopefully it kind of explains how that works for some of the listeners out there. Thank you very much. It takes obviously an expert like you to kind of put these numbers out here and explain it in a way that we can understand it. I appreciate that very much. But yeah, so that was my kind of big question for today. If anyone out there has any additional questions for Mina, she would be more than happy to answer those. You can find her contact information in the comments below. Also, kind of a plug on Mina here. She has been consistently listed as in the top 10 list of lenders in the Orange County area on Yelp. And so very impressive there. And then also feel free to follow her on Instagram as well at what's your Instagram handle again?
Yeah, I try to put out, I've been falling behind lately, but I try to put out educational content for buyers out there. And so if you want to follow me on Instagram, it's Mina Mortgage.
Awesome. Well, very good. And thank you again very much, Mina. You have a great day, and I will talk to you real soon.
Yeah, sounds good, Marcus. Thank you again for having me.
You bet.